This is Brad with the Noble Precious Metals Report for June 21st, 2021, which is also the first day of summer. So congrats, we've made it this far. Before we jump in, I just wanted to take a second and explain a few things. When I really got into stacking silver, it wasn't too long before I started coming up against the common assertions that we so often hear whenever we're dealing with precious metals. Silver is undervalued. Silver is being held down by manipulation. Precious metals are primed to go to the moon, or premiums are too high, and so on and so on and so on. And these get repeated so many times that there's a basis in just accepting them as plain fact. However, as you've likely guessed by now, if you've watched any of my reports, I'm not a guy who can simply take something at face value. I need proof, and I likely want to have it quantified in some way. I don't just want to see anecdotal proof. I want to see something that's hard numbers. I want to see the trends. I want to see where things are going. And part of it is that's why I started this report. As I've brushed up against any of these assertions, I've tried to disprove it. I've tried to take a scientific stance on things and say, if you're claiming that something's manipulated, where is the proof of it? Where are the telltale signs? If premiums are too high, what are you basing that off of? Where is the underlying price? Are we seeing premiums escalating? Are we not? Things like that. So as part of this disproval process, I collected evidence and began analyzing results. And I've sliced and I've diced and pressed on. And a few things happened. Sometimes the statements fall in the face of facts. You know, that they just don't survive the light of scrutiny. Sometimes they're strengthened. You know, so sometimes they're absolutely 100% true. But often the truth lies somewhere in the middle. It's not, you know, it's not to one extreme or the other. It's something that, you know, there's a little bit of truth in any lie. And that's kind of where I've found a significant amount of this. So over the thousands of hours I've spent poring over data, writing about it, referring to people in the industry to get insider takes on it, I said no one is telling this story. No one is reporting the facts, and especially with the breadth of it. And even the biggest names report snippets on the market. And if you kind of cruise through the financial data or the financial channels, things like that, you're going to see a lot of reports on what is the spot market doing? What's the futures market doing? You know, gold is up, silver's down, blah, 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 everything else. And some content creators, and I will give them their due, some are incredibly good at what they do. And as someone who's starting out, I have an appreciation of the effort and the quality that goes into what they're doing. But they talk about retail, but it's anecdotal. It's based off of a sample that's limited to maybe one shop or something else that goes along. So it doesn't really have the breadth of looking at things. And with small sample sizes, you can't draw conclusions. You can draw a very distinct conclusion that applies simply to that very small sample, but you can't apply it to an entire industry or something that's globally applicable. So I haven't seen one channel that breaks down the market, the economics, the retail landscape. So I decided to fill a gap, and without the hyperbole or other sensationalism that we all too often see in this. So that was really kind of what this channel's about and where we got going. And I thought it was important to kind of bring that up. And especially in the coming weeks, I've been putting together some interviews with commodities traders, some hedge fund managers, that I really want to get them on so that we can discuss a more in-depth take on the trading cycle. Because I think that's important that people understand what is the psychology behind this? What are the decisions that go into it? And how does all of this kind of move within the market? Because it does affect everyone that's involved. If you're tuning into this channel, chances are you have some sort of vested interest in seeing what precious metals are doing, why they're doing it, and just trying to get a leg up because you might be invested in some way, whether it's in, paper, in an ETF, in physical, whatever. But you need that data. You need to understand what's your investment likely going to do based off of certain conditions and inputs. So that's really what I'm trying to do is put that together to give you guys some more insights into it. And I'm also pulling together some additional content on the dynamics of the commodities market. What is spot? Where is it relevant? Why is it relevant? And why it's not relevant to physical in a retail setting. And I mean, some of this stuff is going to be a little bit heavier, but then again, I'm not trying to keep things light. If you're with me, you're with me, and hopefully you'll pick things up and just kind of trudge through with it. So I do have more content coming up, but generally the mandate is I want to better inform and educate. My goal is ultimately to make this the destination for accurate analysis and information about precious metals. It hopefully it'll entertain a little bit, but more than anything, I hope that it educates. So if you want to support the goal, I'll throw the pitch in right now. I encourage you to like, share, and subscribe. If you want to go further, please check out my ebook that I wrote, which is Stacking Silver, which is a market-based approach. It's a collection of a lot of research that I did and a lot of writing and insights into the markets, how to be a better buyer and seller, and also how to understand a lot of what I'm talking about here. It's not necessary, but you can. So if you want to help out, the link is in the description. Check it out. I encourage you to. If not, that's fine too. Just I welcome you to enjoy the report. So with no further ado and no more gilding of the lily, shall we say, let's jump right in. So as I've been kind of rambling on, I've had the FinViz board up. And the broad view of the markets, as you can kind of see, is mostly mixed today. Equities are up, which is always a pretty good sign. Futures are pretty choppy. We have a lot of black, which is just indicating that they're running real close to zero. No gains, no losses. We have some red on the board. The red isn't necessarily the maroon red, but we have a lot more of the greater than 1%, I'll say, which is that brighter red. We have a lot of the mucus green, so there's moderate gains, but not anything really to write home about. And within commodities, there's only 3 or 4 that are in the lime green range, which indicates that there's any type of significant gains that are going on today. So all in all, for a Monday, I mean, coming off of the week that we had, it's about what I expected. It's not anything that really shocks me too much. I wasn't expecting some massive turnaround or anything like that. So let's take a look real quick at the dashboard. And I did actually change up the tables here so they didn't look quite as horrible, because that was kind of bugging me for the last couple weeks. So this week we've got some decent reports that are coming out. The big one is tomorrow. We've got existing home sales. They're expecting the median forecast is supposed to go down. So it'll be interesting by 175, 150,000. So as we start looking at that, it's going to be interesting to see what the actual is and whether it does continue that trend or whatever. But these are existing home sales, so these aren't new builds. New home sales is coming up on Wednesday. But this will actually give us a good indication of whether, the real estate market is starting to soften, or if it's something that it's continuing on. So look forward to that, because I think that's going to be a good leading economic indicator of showing where things are moving and how they're going. So just going down further, as we bring up the Treasury report, we can see that it's, what time is it? It is 10:51 right now, and we can see that the trading is pretty much where it's pretty flat. Um, Back on the 18th, when we closed, 147. Uh, Today it's 147 again. We've done a little bit more consolidation on the high and low, so there's pretty much some, I'll say, agreement on non-agreement. So you've got really just this kind of flat line going through. It'll be interesting to see where this falls tomorrow, and we'll revisit that. But to see if it went up, if it went down by end of day, or what happened. So because today is Monday, we can get into the market sentiment that was reported on Friday afternoon late. So this, again, we're not seeing too much of a significant change. We're seeing continued consolidation on silver. The positions on the shorts are kind of, net contracting a little bit. You're seeing a very minor bump on what's going on with the longs, and overall sentiment itself. You can see that there's kind of that shift between the last two reports. That, yeah, I mean, we jumped by 3% on the sentiment algorithm. So what that actually means, that's a great question. There's not a significant amount of change right now that's indicating any sort of leading trend. It seems like people are dipping their toes into the water, that there's possibly going to be some change. But as of right now, the positions haven't changed that significantly where we can actually like draw any conclusions. So it's probably going to be a couple of weeks of reports before we start seeing whether this trend is going to continue, and what kind of the fall positioning is going to look like. But for right now, it's kind of, holding steady, and that's it. And unfortunately, gold is pretty much in about the same position. We're seeing a little bit of a decline on the long positions that have shifted down, but again, not that much. I mean, we've got 1.1% from, and we have a contraction on the shorts as well. So again, based off of these levels, it's just kind of the same seas. They're just chopping right along. I don't see any major adjustment that's within the whales right now. So we'll have to see where that goes. The summer should be interesting. So let's turn our attention to the markets themselves and see where things are. And as we can kind of see within the comparison between gold and silver, we can see that both of these, again, they're moving sympathetically. So there's no big diversions there. We do have this W that's forming, this double bottom that's forming on gold. But there's nothing that's significant that's showing anything. As I zoom into silver, we'll take a look at this for just the last 24 hours or so. Most of this over the 5-day VWAP, again, we're seeing that this is really just kind of riding. We're in that -2 band on the 5-day. Everything has widened up considerably. I mean, there's a pretty decent distinction between, right now it's 25.47 all the way up to a high of 27.56. So for silver in this band, I mean, that's a pretty good range to go through. We normally don't see that much of a $2 spread or more on it. So we are seeing that, silver is just kind of chopped. We had this slight dip that occurred first thing this morning, between in the 1 to 2 o'clock hours. We had that hour where it kind of dipped and that recovered, and that just kind of churned along the line of -1, -1, -2 zones. So when we add in the previous day VWAP, we can see we're still riding in that same way and even with the intraday, we're still riding the same way with it. So nothing too unexpected. I don't expect to see any huge jumps today, and I'll get into that in a minute of why. There is a pretty good reason for it. But with gold, so as we pull up gold, kind of the same thing. We can see that gold did expand quite a bit because volume moves and price moves and everything else were, we have that -2 at 1752 and the +2 at 1844. And gold, very similar to silver, has been riding right along that -1, -2 boundary. So again, don't expect too much big moves as we start to apply these things. Both volume weighted averages, that everything's riding right where it should be. Everything is in agreement at this point. So I expect this to continue at least through the day. I'll be surprised if it doesn't. Just because there's really not much going on, and no one's really, there are no reports that are coming up there unless something unexpected happens. I expect this to be kind of today's trend. The gold silver ratio, we did see the adjustment over the weekend. We got as high as 69.03 again when that dip happened. But right now we're at the 68.36, and then of course the retail gold silver is 59.28. So I always get a little bit nervous when that starts approaching 60, when that bottom black line starts approaching 60, because it means that there's some weird elements going on in the retail market, but it's still in the normal range. So moving on to volume, and this is why specifically I'm talking about really not being too concerned with things. There is very, very low volume today. It's no one's really caring that much. There's not any big battles they're waging. So everyone's just kind of, going about their business. Their attention is turned someplace else. They're definitely not issuing the contracts. Even on gold, I mean, 30,000 contracts as of this morning. Silver, we're at 12.5 thousand, and then copper is only at 9,300. So I mean, this is such weak volume. I mean, there's no desire. It's a very low energy day. So I expect that to kind of continue. So moving on to the more exciting stuff, the retail silver. We get into retail silver, and we can definitely see now the trend I've been talking about has continued. We've seen this price drop. Generic silver on the 7-day average, 32.13, which is a nice change. I mean, we're seeing it pretty decent. I mean, we're well over $1 less than 2 weeks ago. American Eagles, those are coming down, and that's actually pretty interesting as well. I'll get into that in the next chart. But as we start seeing, like, even the monster boxes, if you're in the market for 500 ounces of American Silver Eagles all in one go, the average price right now on those per unit can get you as low as $39.82. Now, in my mind, I mean, that's still one heck of a premium. But if that's your thing, definitely go for it. Compare that to like a Philharmonic Monster Box at $31.86 versus the $33.29. I mean, that's actually a pretty decent deal for 500 ounces. So, keep on going with that. As we get into the average retail, not too much unexpected. There is, however, this little hump that occurred as we're kind of going through, that we had this hump, then we had this drop that was in the middle of the night, at the 2 o'clock hour, and we kept on going. But we're seeing a tightening between the median and the average, which means that the prices are much more evenly distributed. So, not too bad. If you just kind of pick a random site to go to, you're more than likely going to find, either on the high side or the low side. But if you keep your eyes open, you should be able to get closer to that 30.59 low than the higher price. Eagles. So let's grab the Eagle. So one of the things that we can see with the Eagles is, we were up here as of the 16th, so last week we were at high of 51.12 and a low of 38.39. This week, we're at 36.49. So we've dropped by, $2 on the low end and pretty much about $2 on the high end too. So you've definitely seen that adjustment that's gone through. And, the median is definitely being pulled to a higher price. You're going to find more on the higher end of the spectrum than you are on the lower end. So with the average being lower than the median, the lows are going to be the anomaly. So definitely, set your expectations properly. If I would have to guess, I'd say probably around that, that 41, 42 mark. So somewhere in that neighborhood is going to be where you're probably going to find some averages. But then again, also check your local guys, check reputable dealers online if that's your thing, and go into it. So this is one of those other things that I bring up every once in a while, and especially now in this type of a weird pricing regime where we've just had price drop. We're definitely seeing that, the actual premium on things isn't really changing. That there's still a very continuous and consistent change for the absolute dollars above spot. So we're at, 5.59 right now on average. But the percentages have gone up. So you're still really paying the same over. So there's a weird dynamic that goes on. I don't want to dive too far into it right now just because I know that this video is already going along. But it's just one of those things that I will probably tomorrow. I'll spend more time on this and really start diving into the concept of premiums, where they're coming from, and what they're doing. So just one of those things to realize that the average amount over spot hasn't changed, especially on the generics. It's the perceived percentage over that has. So moving into the market to retail movements, we can see that, silver has been tracking, and it kind of moves along with that consistency that we've seen. That the $5 mark is really what we've seen all the way through, and this holds continuous. So over the last 24 hours, prices have moved in tandem. They really haven't changed distance between it. They're still averaging the same, and we can see this a little bit better within this whole where spot is the baseline. So we can see that there was that one spot where, at 130, the prices hadn't adjusted. But yeah, we saw that dip at 2 o'clock and 2:30 where, yeah, they had adjusted. And so you could start seeing kind of that push and the snap back and everything else. And so the markets are moving. They're adjusting. I don't see any real big difference right now, although I think that if there is some sort of a radical change that goes into a different direction, we will start seeing it. And that's part of why I've been looking for months now, as I've had this data. So retail gold, very similar to retail silver. There's not a significant amount different than what we've already covered. The trends are continuing because of the drop. I mean, they're a little bit more accentuated. So we can see, say like the 1 ounce generic. Last week we had a very slight drop. This week we have a little bit bigger drop. But we're still really, within the same amounts, things like that. that it's one of those things that you have to look if you're in the gold market, looking for a good price is out there. You can. It's just understand that there is a wide disparity between the highs and the lows, and we can see that as we start to go into here, where we start seeing that the low, 1821 on a 1 ounce generic, high 1880, and this is on the 20th. We move into today and all the way over, and we could see that we're at 1835 low, 1874 high, with the median and the average pretty much right on par with each other. So I mean, these are you can find it. You can find the deals. They do exist. The retail market isn't quite as broad or as variable as what you see with the silver market. So you just have to do a little bit more homework on it. With the gold market to retail, again, we're seeing that same thing, and I've watched this for a while. These gold buffaloes, the average movement on a gold buffalo differs normally pretty dramatically from the other main indexes that I use, such as, I mean, the Gold Eagle, or the Philharmonics or the Maples or anything like that. You see these gold buffaloes, and they just move on their own. So it's an interesting dynamic to kind of watch. And even as we get into just the total variance, we can see that gold buffalo shot up yesterday. They had pretty good movement, and then all of a sudden, they just kind of hung out where they were. So there was a price adjustment on them that was almost 1%. I mean, it was about 90% or 0.9% price difference. So then they just maintained that continuous distance. So something to watch for. If you're in the market for those gold buffaloes, I'm not really sure who is. I haven't really met anyone who's ever looked at me and said, "Wow, I really love those gold buffaloes." But I'm sure that there is someone, because they're out there, and people buy them, I guess. So that will about do it for today. Thanks for tuning in. Hope to catch you tomorrow, and hopefully I'll be a little bit more brief tomorrow. But thank you very much, and have a great first day of summer.